In this video, I'm going to show you exactly where I'm at in this stock market, this falling stock market, right? Everybody's running for the door. But here's the deal. This is the time to make a stand, and this is where I am making a stand. So look, if you want to hear about where I'm at, what I've done, stick around. I know you're going to like this one. Hey, welcome back, everyone. It is time for another red hot cover call video. Well, hey, look, if you've been wondering where I've been traveling. Visited my mom on Mother's Day, and I'll tell you what, haven't done that in 30 years. Have to take half cup full moments. And that was one for me. Look, this stock market is absolutely crushing everyone. And if you haven't put in the time, you haven't the experience. Moments like these are absolutely crushing our accounts, but more importantly and more scary, our emotions. There's a lot of people out there right now that absolutely are feeling depressed. Now, what I hope over the past 5 years is that I've shown you that this is as much a money game as much as it is an emotional game. If you remember, back in 2015, I suffered severe anxiety and depression because of the stock market. Since then, I have recovered. You've seen all my videos of what I do. And what I do is I stay the course. We have been anticipating this for actually years. We knew this was going to happen. Now, with that said, what are we going to do? Well, we know that the Fed is now raising interest rates. We know that there's a red hot jobs market. And on top of that, we have supply chain issues. So you have all of these things that's jacking up inflation. Then you have issues, geopolitical issues that are just all over the place. So the stock market does not have certainty. Over the years, I've told you it's all about certainty. If they have certainty, if they can grab onto something, they will. And they'll move the markets higher. They've proven it. At the end of the day, it's about your skill. It's about your experience navigating times like this. Do you remember in March 2020 when everyone was literally throwing the baby out with the bathwater? I had one of my biggest years ever. Not bragging or boasting, okay? I have a skill. I use that skill to generate cash flow. So the job of my selling premium portfolio is to generate cash flow. Period. End of story. Okay? So whatever's happening in the stock market really is irrelevant to what the portfolio must do. It must generate cash flow, whether it's a $100 trade, a $1,000 trade, or even a $10,000 trade. I have to have cash flow because the bills do not stop. Okay? That should be by now the message from my channel. We're here to generate cash flow. We look at it in a 30-day window, and we're going to try to take advantage of the situations that are presented. Okay? This market presents a great opportunity for cash secure puts. Now, we're not going to talk about that here. I'll come back next week, talk about the cash secure puts. I've actually sold some cash secure puts on the indexes, right? I've told you over the years, we want to use the indexes. Recently, I got involved in a Dutch Brothers trade, and of course, I'm down by half. If we can use the indexes to generate the cash flow needed, that is the preferred trade. Companies have people running the show, and people screw things up. And we, as investors, find ourselves right in the crosshairs of either a positive move or a negative move, and here I am stuck with the dog that is Dutch Bros. Now, I have a cash secure put, and I think it expires late this month. So anything can happen. With that said, try to use the indexes. Now, I've been at this game for so long, I use the ETFs that are XXX leveraged. Now, you know that. A lot of people do not want to touch them, but I believe we're still using the indexes. Whether you're using the SPY for the S&P 500 or I'm using UPRO, which is the 3X leveraged, the juice is the same. 1X leveraged SPY, 3X leveraged UPRO. No difference. It's just I believe I can handle the volatility of UPRO, so I use UPRO. Look, investing in the S&P 500 is one of the most common investments on Wall Street. So using those indexes, we're diversified, right? I'm not experiencing Dutch Bros missing earnings and the stock falls by half, okay? Unless the world is collapsing, the S&P 500 will not fall by half. That's where I'm at I'm trying to use those indexes, I'm using a little bit of juice, and I'm mixing in my current portfolio, all the little covered call crumbs that I can. And yeah, I'm spinning plates, man. I'm trying to make 100 here, 200 there. It's not as plentiful as it was. But hey, look, we got to pay the bills, so I keep doing it. Today we're going to talk about a trade for which I'm underwater and quite frankly, is worthless to me right now. Yeah, we're going to talk about the poor man's covered call, how I believe it's still one of the more favorable trades, but there's a huge asterisk next to that. And I'm experiencing it right now. So I'm going to share with you that, and I'm going to share with you my numbers, just so anyone out there needs a little ups, right? You need a little motivation that somebody out there is working it and trying to keep working it. Well, that's me, okay? When you're a real trader and you're in the trenches doing what you have to do to put money on the table and you don't rely on YouTube money, tell you what, you get a greater experience of the hell that can be out there, but more important, you learn it. And in that moment, when literally the market is raining down upon us, we're able to make some trades for which we make some money. We don't crawl into the fetal position and worry if anyone's watching our YouTube videos. With that said, let's go ahead and get to this. If you like anything you're about to hear or have heard, subscribe to the channel. I try to come back every week, give you motivation and inspiration to up your game. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. And what I'm doing is this, I'm showing you my cash flow. Yeah, a lot of people don't like the fact that I come here and talk about profits. I see things a little differently than others, but I do recognize that maybe they aren't profits, but they're definitely cash flow. See, at the end of the day, I argue that I put the real money on the table. You cannot deny that, but I also acknowledge that they're not profits. Maybe that lingo is misleading. So we're talking cash flow, and that's what I do. And right now, the portfolio is such. We're generating close to $1,200 already. And if all of my trades in this month of March, for which we have had 5 consecutive weeks of the market falling, that would be $4,000 that will be placed on the table. Now, chances are I won't have $4,000 on the table because I like to buy my options back and we push them forward to the next month. Always remember, it's about cash flow generation when we're selling premium. It's about 30 days. See, if you think about the overall market and how much it has fallen and how much it might have to take to get back, you will be crushed emotionally. You'll never be able to get out from under that dark cloud. Think about it in the next 30 days like I do. We do what we have to do. Okay, as you can see, this video today is more about motivation and inspiration than it is anything about learning how to sell premium. But I am going to show you how I sell premium on a poor man's covered call trade that is absolutely worthless right now, and we're going to talk about that here next. Now, so far this year, I've made or booked $31,163. So we took advantage of a market that was moving sideways to higher. Now, of course, 5 to 6 straight weeks of it selling off because of inflation and the jobs numbers and all these geopolitical things that are happening. Well, now we're suffering. Even though the overall size of my portfolio, right? We're using about $225,000. The value of that portfolio is obviously down, but here's the deal. We didn't sell any. We still have those positions, and now we're going to write 30-day, 30 delta, which is deep out of the money strikes, and we're going to try to collect crumbs. Look, if I collect a crumb here, a crumb there, man, I'm able to pay the bills. Now, as you get better at this selling premium game, writing covered calls, selling cash secure puts, you can put on more trades. They don't have to be bigger trades, but you could put on more trades for which you're more diversified. I mean, right now, I'm using Bristol Myers, PayPal, Square. I'm using Morgan Stanley, 3M. Now, I'm not using PayPal because we're going to talk about that right now, how my LEAPS option is now worthless to me. Let's go ahead and get to that. Now, I know you're saying, look, dude's still pitching his membership, market's crashing. But look, telling you what, you have that community of support, somebody out here that's actually in the trenches, man. I try to send communications that up the game. These are daily. Here I'm talking about the poor man's covered call and PayPal. We're going to go to the chart. I'm going to show you that trade. Here I'm giving some market insights of how I feel about the markets. Remember, seeing the world through my eyes, an active trader, someone that's actively trading right now, trying to make the little crumbs to get us through this very hard time. And of course, I always try to enlighten you, up your game. I just sent out the 10 cons of the poor man's covered call, where I talk about the 10 things that you have to be aware of to the negative of using the poor man's covered call. Tell you what, I love educating and sharing my talent. So if you want to be a part of this, where I show you all these trades I talk about and what I'm doing right now in this crashing market, you go back to my website, cptdashboard.com, you sign up, I give you 1 free month. Hey, look, people are coming and going all the time. It's easy to turn off the stock market. I know, I've been there, but we don't do that anymore. We have to generate cash flow. I have to stay focused, and I will. Through determination and diligence and just pure perseverance, we continue to generate cash flow that pays the bill. So look, cptdashboard.com, click Upgraded Dashboard, get your free month. Would love to welcome you aboard. Now let's talk about my LEAPS that are underwater. Now, real quick, what is the poor man's covered call? Well, instead of buying 100 shares of stock, we're going to use a LEAPS call option as protection. I'm going to use a deep in the money LEAPS call option to provide me protection in case I have to give my shares up. Well, I don't have shares, so I have to be able to take shares from somebody. So that's why we buy the LEAPS. It's a very inexpensive way to get in the game of writing covered calls, generating real near-term income. Now, I love the poor man's covered call with one big fat disclaimer. And this is about the biggest fear of the poor man's covered call. If the stock falls below our strike price, when we buy that LEAPS call option, right, we have a strike price. When PayPal was trading at 174, I bought 95 LEAPS for protection, right? If the stock's trading such that I have my shares taken away, I will execute that, buy somebody's shares at 95, give those to the new call buyer, I keep the difference. This trade works great as long as the stock stays above your LEAPS call option strike price. When the stock falls below the LEAPS call option strike price, we have no protection. Right? I'm not going to go out into the market and buy this guy's shares at 95 when the stock's trading at 74. So my LEAPS call option becomes worthless to me at that moment using the poor man's covered call. Now the LEAPS still has value, right? I bought the right, but not the obligation to take their shares January 2023 at 95. So the LEAPS call option is still live and it's still worth something. It's just worthless to me in this poor man's covered call strategy. Outside of me being risky, writing a covered call, knowing that I could have my shares taken away lower than my 95 strike on PayPal. So it has to sit on the bench. And it has to sit on the bench in the worst possible way because I can't use it unless the stock gets to 95. Had I owned the stock, it's trading at 74. Because I own the shares, I could technically write 30-day, 30 delta or less covered calls. But I can't do that here unless I want to take on tremendous risk. So with that said, where are we at? Right now, PayPal is trading at $74. My LEAPS strike is 95. So here's the deal. I said to the members, look, we have to be conscious of this, and here's the breakdown. And the breakdown is simple. If the stock falls below my LEAPS call option price, we're in trouble. We cannot use it anymore for near-term cover calls unless I want to take that risk. I do not want to take that risk because we might get a snapback rally. We have fallen such that the S&P 500 is down 17% right now. If we get a snapback rally, I am boxed in that the stock could rocket above a near-term covered call. I'd be buying back the option to alleviate the obligation, adding to my cost basis. This becomes a disaster. What can I do? What can I do when PayPal is trading below 95? My LEAPS is now worthless until it gets above 95. Well, here's what we can do. We can literally sit and wait, okay? We have to wait. We have to wait. We can't be risky in writing covered calls now. Unless you're fearless, with this LEAPS option, I cannot move forward. Now, I can dollar cost average, and this is what I'm going to do. I can go out and look for another LEAPS call option that makes sense. Remember, we're not going to buy the same strike. I've been telling you this for over a year. We want to buy the LEAPS call option that makes the most sense, the LEAPS call option that has the least amount of time value or cost in the trade. We dollar cost average. We lower our LEAPS call option cost basis, and if I can bring that down below where the stock's trading, we could start writing near-term covered calls. Now remember, at this point, I have 7 months before this expires. So we have time, and through experience of this, I'm not worried. A lot of people would be getting worried right now. In fact, people are emailing me saying, John, what are you going to do with that January 2023 expire? I'll tell you, I have 7 months, and I believe we can move higher, and it can move above 95. Now, what is one of the worst case scenarios? Well, I can cash out. Right now, that LEAPS call option does have a value. I mean, it's trading for like $7.50. So I could actually sell it for $7.50, taking a horrible loss. Let me show you what the numbers look like for a PayPal share purchase versus my poor man's covered call trade. Now, before we get there, let me give you a little backstory on my experience with PayPal. Well, when it sold off here, I did not believe PayPal should be that cheap. Just like everybody else on Wall Street talking about how PayPal is a super cheap bargain. Well, that bargain kept going down. I decided to use the poor man's covered call back when it was trading about here and decided to buy those 2 LEAPS deep in the money, making sure I bought the LEAPS call options that had the least amount of time value, and we were going to write covered calls. Well, I did that. I actually pocketed $2,300 in near-term covered calls, cash flow, using these LEAPS. But the markets keep falling, and so does PayPal, and next thing you know, here we are. Stock's trading for something like $77. I'm now under my LEAPS price. Anything below that LEAPS price, I am not protected. I would have my shares taken away at a lower price, so my LEAPS is worthless. I'm not going to exercise my LEAPS to obtain the shares because I'd be paying $95. I would buy them for $77. Okay, let me show you how the numbers would play out if I were to end this trade right now, buying the shares using the poor man's covered call. Now, I'll be brief here. If I bought the shares at 174X, I would have invested $34,940. And as you can see, the stock is down some 99 points. My position is down $19,000. I decided to buy 2 LEAPS call options. And my original investment, right? My initial investment is much lower because I basically paid half, all right? So my LEAPS purchases, remember I bought the 95 LEAP, it cost me $16,800 to have possession of 200 shares of the 95 LEAP. Now again, it's a LEAPS, so there is an expiration. It's not like holding the shares where I could hold them forever. I have until January 2023. So now I have to jump into action, start writing near-term covered calls to generate the income so we can maximize this trade. Well, as you can see, it has lost hella value. I think this option is now trading for $7.50. But here's the deal. If you focus on that, I think you're missing the bigger picture. The stock's down $99. I'm down on my LEAPS option from $85 to $7.50. Now remember the purpose of the LEAPS call option. It was never to make money on the LEAPS call option. It was to provide me protection. Okay, so you have to understand that because a lot of people look at that $7.50 LEAPS call option and they're saying, dude, you are down over 70, 80%. Well, remember, the purpose was to provide protection because at the end of the day, come January 2023, if the stock's trading above 95, that's when I will obtain their shares at 95. That ultimately I will own PayPal shares at 95. I paid 85 for the option, so I'm down just like every other PayPal shareholder. Now, I better want to own the shares, right? And that's why I picked PayPal. But right now, if I ended this trade, I just couldn't deal with it emotionally. Here's how the numbers pan out. Now, I told the members, look, losing is losing, and I'm not sugarcoating this, but here's the deal. If I own the shares, I'm down 19 G's. I made $2,284 in near-term covered calls, so my absolute 100% loss is $17,600. Now, because I bought the LEAPS instead, I'm down 15 G's on the LEAPS. I've made $2,284 in near-term covered calls. My absolute loss is $13,000. Now again, I'm down 13 G's. But for me, I'm willing to take that risk of the poor man's covered call. It is rare that this moment happens, but it does happen. So I have to be prepared for it. That's why the mindset is important. I've also told you over the years, you got to have the mindset. You hear people on YouTube say mindset people are nothing more than mindset entrepreneurs that try to bait you into buying their memberships, buying their programs, because a mindset is going to set you free. Well, I'm here to tell you, you better have the mindset to handle moments like this. And that's why I come back to this channel and try to show you what I'm doing so somebody will sit out there and say, look, I can do this. I could lose a lot of money like him too, but I'm not going to get in the fetal position and turn away. Look, we're down. We're all down. But I always try to find the half cup full because I got to pay the bills. Look, next month in June, I got to keep doing this. June, July, August, September. Can't take months and months off. At the end of the day, it's about me putting money on my table as I'm in retirement using a portfolio. I'm going to use my tools, right? I'm going to use my tools. I'm going to do all the things I need to do to make good, smart decisions. But more importantly, I have the approach that might be flippant to some people, but this too will pass. When the market fell some 50% and it absolutely crashed in March 2020, I had to dig deep, and I did. And we came out of that a better trader, excited, more experienced, and inspired to keep doing it. I proved to myself that in a market crash, although we had to do multiple things to get there, we actually had one of the greatest years I've ever had, making almost $110,000, not selling any of my positions, and we moved on to 2021. I'll tell you, you have to have that mindset. Now, I appreciate you hanging out for that rant. Go to CPT Dashboard, click Upgraded Dashboard. I'll give you 1 free month. Join me, see what we're doing at the membership, and see the trades I do. We are still spinning the plates trying to generate the cash flow needed to pay the bills in this falling stock market. Look, I have an opinion of where I think the stock market goes, and I share that with my members. But with that said, I also explain how I'm going to trade the markets and how I'm going to react if it goes one way or the other. Join me, 1 free month. But more importantly, if you're out there, you're in shock, you have anxiety and depression that the market has fallen off such, just do understand. Through learning and experience, you start to build that cast iron stomach for volatility. And that's how I came through my anxiety when the markets tanked in 2015. Now, I'm not saying I don't get stressed now, but I handle falling markets a little different now than I did then. I look at them as opportunities versus hell is raining from the sky. Look, I'm going to leave it there. I wish you the best. I want you to come back next week. We're going to talk about using the cash secure put and how I'm doing that in this falling market to generate some real nice cash flow. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.